Good morning, good afternoon, and good evening, folks. I hope all is well. As always, let's do a sound check and a screen check. So if you can hear me and if you can see my screen. Oh, great, Shane. Thank you so much for being the first one to drop that. And Amutha and Leonard, thank you so much. But today's award goes to Shane because he was the first one to really draw that straight out that yes, all is well. Nonetheless, it's really good to see so many familiar names as always. Thank you so much for taking the time out, as always, to come and attend our series of webinar. Today's webinar is certainly very, very important, and we will go into a lot more detail into that very shortly. Before I do that, very briefly about myself, my name is Naeem Aslam. I come with a wealth of over 15 years of trading experience. During this time period, I have worked as a hedge fund trader for Bank of New York Mellon and as an equity trader with Bank of America, currently providing services as a chief analyst to AvaTrade. Now, a bit of a housekeeping, which is just to go through about the disclaimers and similar things, which is right in front of you. If you guys do have any questions in relation to that, please always feel free to ask me. The contact details on our Twitter, for the Twitter handle for us is AvaTrade, and of course the YouTube is there as well. We do upload all the recordings for our webinars on our YouTube, and in addition to that, we also have our technical analysis videos and other fundamental videos there as well for your reference. Now, the agenda for today's webinar really is the US non-farm payroll data, because that is the most important one. This is the most significant meeting that we are going, or economic event that we are going to see this week, and the importance of this event is not only limited to this particular week, but we are also likely to see the influence of this one throughout this this month and of course in the coming weeks as well. So this is a really, really important data. We will discuss all of that in a lot more detail briefly as well. Now, for those of you who have attended our previous webinars in relation to this US NFP, the question for those of you who have attended, can you please tell me what are the ingredients for the US NFP reading? Because one important number which makes a US NFP is going to be released, let's say, in about 12 minutes time, and we are going to see that live data coming as it comes, and then we will see the reaction of that on the back of that as well. So, but if anyone can just, don't be shy, there are no right or wrong answers in relation to that. You can always just dig in, just say that, okay, measuring of workers in the US, excluding farm workers. That's a very, very good explanation, Amutha. So basically what Amutha is saying really there is that we have two different sort of employment or payroll data. One of that is going to be hitting the terminals in about now 11 minutes from now, which is 13:15 London time, or 1:15 London time. So, or 11 minutes from now, we are going to get the private payroll numbers, and that private payroll number is really going to give us clues for the actual US NFP data, which is going to be coming on Friday. This particular number, the US NFP over here, this comes in at 1:30. So let me just write it down over here. So this is going to be coming at 1:30 London time on Friday, and when this particular number is going to hit the tapes, meaning when it will come out, we are going to see enormous amount of volatility in the market. Of course, you can see these numbers on various different data sources such as Forex Factory or even our own internal on AvaTrade's economic calendar as well. We'll have a look on all of that in a bit as well. Now, the next study question from here onwards is really what sort of instruments really can we trade on the back of this particular data? Can you guys give me some clues about that? So what different instruments? So let me give you one clue over here, which is Forex. So what do you think we can really trade on the back of this one in terms of Forex? You know, which pairs or which Forex pairs are likely to see higher volatility on the back of that? Absolutely, Kevin, you are hitting the nail on the head. Kevin is saying euro dollar is one of that is very much likely to see. Someone else is saying sterling dollar as well. Thank you, Amutha. Thank you, Andres, for being so proactive, and Shane for mentioning sterling dollar, and Kevin for euro dollar, and so many other people who have answered. Appreciate your answers there as well. So yes, so euro dollar, sterling dollar, you know, all of them, GBP, USD, they're going to be very, very important. And of course, the Japanese yen as well on the back of this one at 130 or at 115 today as well. When this particular data will come, we will see the big movements in these particular pairs. Now, what other instruments can we trade on back of that? So obviously, you know, Forex is just one of the categories. So what other instruments can we trade on back of that? So there you go. Shane is coming back. Shane is saying that commodities. So obviously, in terms of commodities, what we really mean by commodities over here, if I can write it properly over here, is gold, right? Let me put it over here. So gold is going to see enormous amount of volatility on the back of this particular data. So at 115, we will see today as well, gold price is going to see enormous amount of volatility, which would present, you know, few opportunities for us in terms of market and where can we really look at that opportunity. We will discuss that in a bit as well. But yes, commodities, as you guys have described it perfectly, that the commodities is the next one. And what is the other instrument on the back of this one that you can really trade on back of that? So someone has earlier said indices. Yes, that was absolutely correct. We are likely to see pretty big volatility in terms of indices as well. All indices such as, you know, S&P 500 index, the Dow Jones Industrial Average, and of course the Nasdaq, they are all going to see pretty big moves. And then these are not only US indices where we are going to see that particular movement as well. In fact, we are likely to see that movement in across other indices as well. Now, what do I mean by that? Do you guys wanted to give me a clue that what other indices are we going to see the particular moves as well? Of course, you know, S&P 500, Dow Jones, and Nasdaq, these are US indices. But can you name some European indices? Because they are also very much attached to the US indices as well. And they are also very much going to have pretty big moves on the back of that as well. There you go. Amutha is saying German DAX. The DAX 30 is also going to see a particular moves on the back of that. So that is absolutely correct, because markets are very much interrelated. So we are going to see German index really reacting on the back of this one, and then we are going to see FTSE as well. Shane is saying FTSE as well, and DAX 30 and Nikkei. So all of these indices we will see again now in less than about 6 minutes when the data will come, how that is really going to have influence in relation to that as well. Now let's go back and then let's have a look let me get rid of that. So let's have a look in terms of what to expect in terms of really data, and then what we are really expecting in terms of the economic data. So let me share my screen again so you guys can see my screen. So what you see is over here, this is the number that we are very much focused on right over here, the ADP number, which is going to be coming over here. And what we are expecting in terms of 640,000 jobs. Previously, we have seen 330,000 jobs. So really the expectations in relation to that are quite high. So we are expecting pretty big, gigantic moves on the back of this particular reading. We will see if that number is really going to meet and if it is going to live up to the expectations or not. But that is something that only time will tell. But for the time being, we need to keep that number in our mind. So that 640,000 is the number that everyone is very much expecting in relation to that. So let's see what opportunities can we see in terms of the market. So this is your US 500 or the S&P 500 index. What we are really going to be expecting is the market to come down. If the data isn't really what the market is wanting to have, we could see that market dropping into this area, or we could see the market dropping at least into this particular area. Now, if the number is really, really great, on the upper side, we are looking at this particular move. So if we just go a little bit more down into smaller time frame, like that 15-minute time frame where we're going to see, so that is the range that we are very much focused on. If the price comes over here, this could be an opportunity, but bear in mind that the better opportunity in relation to that really is, because what we are really marking is the highs and lows of today. But the better opportunity in terms of the S&P 500 index could really be somewhere around this particular, where the 30-day simple moving average is trading. So on the first hour time frame, or on the 60-minute time frame. So that is our second support zone. So this is the support zone area number 2. This is the support zone area number 1. This is our resistance area number 1, and our resistance area number 2 is going to be our all-time high. Now, what about the DAX? The Dow Jones Industrial Average. So again, in terms of the Dow Jones Industrial Average, what we'll be very much focusing on is, again, the lows and the highs of today. First of all, so lows and highs of today, they are not that big at all. We are just trading within that sort of a very, very small range. So the low is here and the high of today is here. So let's see if the market kind of breaks on the back of this one. So that is the kind of a data that we are looking at. So this area and then this area is what we are very much looking at on the back of this one. As for the DAX index, we're going to look at pretty much the same over here as well. What I'm going to do, I'm going to put it right over here, the lows, and I'm going to look at the highs of today. So really, we are expecting big moves on the back of this particular data, which will be coming in 2 minutes or less than that. Now, in terms of a gold prices, again, it could be a big moves, and then I'm really, in terms of a support, the opportunity is going to be at 1801, or in fact at that 1796 sort of a price level is my buy area that I would be very much looking at on the back of this one. And in terms of a resistance, I'm looking at 1818 as a first level of resistance. So let me bring out that 30-minute time frame just to make sure that we are looking at it. So these are the time frames that are very much we are focused on. So let's now drill them down into smaller time frames. So we are focused on this one over here. We are focused on this one over here. And then in terms of over here, we are focused over here. And then for euro dollar, let me just bring out the euro dollar over here quickly as well. So while we have it over here, let me just bring that to 30-minute time frame, and we are focusing right over here as the support zone, and then we're looking in terms of resistances over here. So let's go back. Now we are looking at all of these charts in one particular time frame, so we're going to change that to 30-minute. We have this one 30-minute, we have this one as well. There you go. The number is about to come out for the US ADP, and then we are going to see some big moves the moment the number is going to come out. Remember, what we are expecting once again to review is the 640,000. Previous one was 330. The number is about to come any second now. So let's see, it is 1315. The number should be here. We should, I mean, the number is really, seems like the number is very, very strong because it is moving to the upside. The markets have started to move up to the upside. I still don't see the number coming over here. Let me go back to the chart. ADP 374, so a huge miss. 374 for ADP, a huge miss. So let's see what the gold price is really doing. So gold price, so why these equities are moving higher? Because the number wasn't very strong. So that means that, you know, the Federal Reserve isn't going to do the tapering anytime soon. The markets are moving to the upside. Euro dollar is also starting to look a bit more strong as well, and that is because the dollar is losing its momentum. And then that is the same reason over here as well. We see the weakness in the dollar index at the same time, which is pushing the prices higher. So now let's get ready for rumble really over here as well. You can see that the DAX is also moving to the upside. The US 500 index is moving to the upside. So even though we had a very, very bad number, but you can see how everything is moving pretty sharply on the back of this particular move. Futures are higher. The dollar index is lower. And as a result, sterling euro dollar is up. And then if I just bring out the chart for sterling dollar over here, you will see the same chart over here as well. Sterling is moving up on the back of this particular number. Gold is moving up on the back of the euro dollar, on the back of the dollar weakness. So very much what we are looking at is a weakness in the dollar index across the board, and everything which is trading against the dollar is moving to the upside. But now, as the price kind of reached that resistance zone, if I just bring that back, as the price kind of reached that resistance zone just over here, which we marked it, we can see that the price started to move back from that particular zone. So if I just bring that 15-minute time frame, you see that this was the resistance pretty much that we marked it over here. The price has started to move back from that particular area. So that was the opportunity that I kind of wanted to show you guys. Obviously, in terms of the US 15, US 30, the Dow Jones Industrial Average, we were close enough to that particular price level. Again, the prices are shying away and they're moving from our resistance level. For the DAX, obviously, there is nothing really to look at. For the euro dollar, once again, not really much trade right now in terms of really looking at for gold. Again, we'll be looking to short in around that particular level, right around over here. We'll be looking if the prices will come, then we could see some sort of a weakness. Does this make sense to you guys? How we had so many different instruments, and this could be a bit overwhelming for you, but that's how the trading world right kind of really works. Does that make sense to you? Because this is what we are going to see. This is something that you can really follow on Friday as well, that how I had the euro dollar pair over here. We define the highs and lows as an extreme point. We are only interested to trade at the extreme point, just like over here, the price did come close enough to that extreme point because we were looking at 4,539, and then our resistance is at 4,540. You know, so it's not much difference over there, but the price did move to the downside. Now let's see if the price really sort of breaks this particular price level. We will take that breakout trade right now, but we'll try to see if the price is going to have that momentum to break it up. But if the price breaks above this particular level, then that means that the breakout trade will very much focus. And that what is a breakout trade? A breakout trade is when we are actually going long in the direction of the trend. So if the price breaks out of this particular zone, so rather than we're going to try that resistance, or we're going to try that short trade around this one, but given the fact that the momentum can take this one out, then we will take that a long trade. Otherwise, we are still very much focusing on that resistance, on that short trade in terms of the S&P 500 index. Would it be a good idea to set up a pending orders for an announcement this big? Yes, Shane, you could, but you know these particular. So let me explain what Shane is really saying. Shane is saying that ahead of this announcement, can you place a pending orders? So it like sort of a resistance, sell it over here, buy it over here. That's what Shane is really saying. So that can be, but the thing about these particular data numbers is that they move extremely fast. Like today's reaction in reality is nothing what we are going to see on Friday, because on Friday we are going to see 3 times the move in the market what we have seen today. Really, if we see a massive miss like this on Friday, so we could see similar sort of a move in these equity markets to the upside. And again, we can see a lot of weakness in the dollar index coming, which means gold prices could substantially move to the upside. And then that, so if you have a resistance, a sell order over here, and you don't have the stop loss over here, unless you have a stop loss, that's great. But if you don't have a stop loss, then you could incur a very big loss very quickly. So there's no point of rushing when it comes to trading. There would be several opportunities just around the corner. Trading is a game of patience. Whoever understands this particular principle, he or she is going to be winner. Trading is not a short-term gain. Trading is not something where you say, yeah, you know what, I have a £10,000 in my account, I'm going to put that £10,000 on this one particular trade, and then I'm going to double it in a week or overnight or in a few days. That's not what trading is like. Actual trading is like running a business where you run things slowly and then you grow your accounts gradually by keeping a discipline, by not letting emotions ruin your plan, by thinking or by coming under emotion of fear of missing out. Oh God, I missed this particular trade, I missed this opportunity. There will be opportunities all along for you. What you have to understand is that this is a business and you only going to take the trade which fits your risk criteria. You are not going to take a huge or a massive or lunatic risk. You will only take what makes sense according to your profile. Does that make sense to you guys, what I've explained? Because this is very important. Okay, all right. So now we are just monitoring the price action over here. So we are still seeing that price action sort of, the gold price is sort of finding, let me just bring that gold price chart. Let's just maximize every chart and then see the price action a little bit more closely now. So what we are really looking at over here in terms of a gold price is we're looking for the price to break this particular trend line, right? So let's see if the price can really break this particular trend line or at least this resistance. This resistance over here is very important. If price can break this resistance, that would be very positive, which is at 1817, or perhaps 1819 is the actual resistance level that we are looking at. So let's see how the price will continue to fare. In terms of RSI, RSI is showing that yes, the momentum is positive and then prices are likely to move to the upside. But overall, if you look at on a bigger term time frame, then what we see is the price has done nothing. It has done absolutely nothing since 27th or 28th of August until now, because we are very much moving in a sideways pattern after these big gains that we saw on the 26th of August. So really now the question is what the price is going to do about these particular gains. That is the focus. Are we going to see a move to the upside, a continuation of this one, or whether we are going to see a momentum back moving to the downside? That is what investors and traders will be very much focused on in relation to gold prices going forward. So what could you do on Friday? Now, in terms of a Friday, let's go back into a slightly bit more bigger time frame, because obviously gold is quite important. We'll do one equity as well. Now, in terms of a Friday, what we're really looking at, let me delete this one because now this one is not going to make any sense for us. For Friday, what we are very much focused on is we are focused on over here. That's 1779 to 1786 as our potential buy zone, and resistance is going to be that 1829 to 1835. So this is the area for our Friday. Now, for US 500 index, what we are very much focused on is that particular momentum is still very much going to the upside. Seems like that the market is ready to continue to move to the upside. Let me get rid of these ones because now we don't really need them. Okay, so let's go back to a bigger term time frame over here. See what's going on over here. So we can get rid of this one as well. So in terms of this particular index for the S&P 500 index, I wouldn't feel very comfortable in placing a long trade for the S&P 500 index. Why? Because the price has gone way too far and too quickly in terms of the S5 moving average, because this is your 50-day simple moving average, this is your 100, this is your 200-day simple moving average. When was the last time the price really tested this particular 200-day simple moving average? You know, since 2020, May 2020, price has been very much trading to the upside. We are seeing more stronger gains for the price action, and then, you know, we haven't seen any meaningful retracement. The only retracement, bit of a retracement which happened was over here, which the price formed the double bottom over here, and then we saw the big ones, and then we had a bit of a retracement back in February this year, and then afterwards we had a bit of a retracement in June. Now we are very much due for another retracement. So really, in terms of this particular price action, what I kind of wanted to do over here is I wanted to even get rid of this particular resistance zone, and I wanted to extend. Let me just do this one. I want to extend my upper channel line. So that's it. So that's what we are kind of looking at. Now the price is going very much over here. So in terms of a resistance, if the price is really going to continue, so we're just talking about that 4,565 sort of a price level where we could really see a really good resistance in terms of a price action. So for Friday, we would be looking at somewhere around that 4,565 or even at 4,580. So let's just say even less. Let's just say that 70 to 74 is kind of a bit too much. At 69, I think that's the price level that I'll be very much looking at in terms of my resistance for Friday. And what about support? If you're wondering about the support, I think the immediate support needs to be somewhere around this one, so where that 50-day simple moving average is trading. So really, honestly speaking, I think this is going to be somewhere around here. That's where we would be focusing on. So just over here, 4,344 to 4,252 to 4,276. These are the sort of price levels that I will be looking at in terms of my buy zone, and in terms of my sell zone, I'll be looking at 4,569. So we'll continue to monitor this one. Can we do one thing more? Do you want me to do any other instruments in the meantime? All right, anyways, that's time is up. So I wish you guys good luck. Remember, the recording of this one will be uploaded on our YouTube platform, and I will see you guys same time, same place next week. Have a wonderful week until then, and happy trading.